there is this incredible wealth transfer and also wealth concentration when it comes to women. So let's get into it. In this week's Women, Money, and Power, we're exploring how this shift is creating huge implications for how vast sums of money are invested, philanthropy, and the way that wealth is passed on to the next generation. Back with us is Jaime Magyera. She is head of U.S. Wealth Advisory and head of retirement at BlackRock. It's the world's largest asset manager. They notched a record $13.5 trillion in assets. It's up from $1 million when we last talked in June. And we got the figure when BlackRock reported. I don't know that I said your name correctly.
Magyera.
Magyera.
Okay. It was great.
It's been just a crazy Tuesday.
Just like it's
Magyera.
Just like it.
Well, I really like Jaime, so I want to get it right. Great to talk with you. How are you?
Great. It's really good to be back with you.
Well, we are talking about the environment generally, so let's start there. I know we did that over the summer when we talked, because BlackRock just sees so much in terms of the funds it oversees and the flows continue to grow, but that doesn't mean the flows are always going in the same places. What can you give us insight in terms of where money is going and where money is going out of?
Yeah, so first of all, excellent to be here. And you started by talking about flows. I'm going to take a gender perspective on flows.
Yeah.
And talk to you a little bit about where we see money going globally with women. And so women more and more are earning wealth, they're acquiring wealth, they're owning wealth, they're playing a larger role in capital markets. They are investing and benefiting from these capital markets, and we think there's no better sign of hope in the future than having people invest and grow along the capital markets.
Is it because they're earning it themselves and they're having some say, or is it also in terms of couples, because they are often breadwinners as well, that they also have a say at the table?
Yeah, so it's both, right? So when you think about women, women are more often now becoming breadwinners, primary breadwinners, quite often. They're also contributing to household along with their spouses. They're earning more money, but they're also acquiring. And you mentioned the wealth transfer.
Yeah.
We think about that in two ways. There's the intergenerational wealth transfer, where they're gaining assets maybe from their parents as they pass away. But the more interesting one is this horizontal transfer, right? So if a spouse passes away, or if there's a divorce, women are acquiring assets in that way. And they need financial advisors to help. They're reshaping the industry. And women have just not been served in the way they need to be served in the past.
We think about that, right, with Melinda Gates.
Yeah.
We think about it with, Jeff Bezos.
No one died in the Gates
No,
couple.
but I'm just saying there was the big divorces.
Oh, I got
and
you.
all of a sudden you had significant players, certainly in wealth overall, but also in philanthropy.
Yes.
Actually, Cerulli estimates that globally, $124 trillion will change hands in this silver tsunami, and then their current forecasts are that 54 trillion will be passed to spouses first before it goes down another generation. So 40% of those spousal transfers will be to women. So this is what Sally Krawcheck calls the feminization of wealth. And the idea is that the important idea, I think, here for your industry, is that when women get hold of this money, they often don't stick with their same wealth managers. They often say, you know what, I'm going to go with someone else now. So what do you do if you want to get hold of a piece of that pie? Yeah,
so maybe I might even just dimensionalize what you mentioned, because I think about it in percentages. So today, let's call it women responsible and controlling 30% of the world's wealth. That will be 50% by 2030. That will be 70% by 2070. So these are big numbers.
That's pretty amazing.
Big numbers.
Yeah.
And women, as you say, they do things differently, right? And they want to do things differently. And oftentimes when they're getting a hold of this wealth, right, when wealth is passing to them either through their parents and family or through their spouses, they want to do it differently. They want to be served differently. 70% of women leave their husband's financial advisor after a divorce or a death within 1 year.
Wow.
70%.
Why is that?
Because they oftentimes felt not heard, not part of the conversation, not at the table and making decisions. There's a lot of misconceptions around women, right? People think women aren't engaged with finances. Just not true. A third of U.S. households have women as the primary financial decision maker. People think women or call women perhaps a bit risk averse.
Well, that's what I wanted to ask you. Are women risk averse? Like, give me an idea when you're talking about investments. I mean, we've been thinking about the AI trade or private assets. Are they risk averse?
So we did a study.
I hate to make generalizations, but I'm curious if there are any.
True. Yeah, so not a monolith, right? Women are very different. All my friends are different than me. We all do different things and need different things. But generally speaking, we did a study with 2,500 female investors. When we talked to them about their risk tolerance, the majority of them were actually moderate to aggressive because they saw the power of not just gaining wealth through working or through transition, but actually gaining wealth through the capital markets, right? Investing in items that will, and securities and portfolios that will actually help them grow their portfolio. Private markets is a great example. Again, for a financial advisor to play that role and help and coach and guide a woman in how she thinks about her portfolio across public and private. Last time we were together, we talked about direct indexing and the role of taxes, or women oftentimes want to. You're laughing.
Gets me excited, direct indexing.
Yeah,
I love it. You know what? I anchored the ETF show for a long time, and that's a big part of that discussion as well. You know what? It's not just women. Obviously, kids are going to get hold of a lot of this money, and I think, I'm not sure about women, but I know with younger people, they want to do more impact investing than their parents did or their grandparents did. So is that also a key to trying? Because I'm thinking from the perspective of a wealth manager who wants more business. So what I need to do is say, hey, I can set up some direct indexing for you, and I can help you make an impact with the money you invest. It's not just to make more money. You're also going to change some part of the world that you want to. Is that the case?
It is. And I like to use the word purpose because actually impact has many different meanings. And so if I'm a financial advisor and I'm working with a younger client or a woman, I'm going to be talking to them, by the way, men too, right? It's not just about the impact you're having. You could invest in a way that maybe aligns with your values, right? Maybe you have certain values that are important to you to hold in that portfolio.
I love motorcycles, so
I would want to buy
holding.
There we go.
Ducati stock.
There we go.
But I often wonder about that because, if you care about the environment, but if an investment doesn't pay, are people doing that because they believe in it, but it may not return as much as something else?
I'm going to give you an answer that will be terribly unfulfilling. It depends.
Okay.
Right? So there are people, and by the way, let's step away from the portfolio for a moment and say, what about philanthropy? This is where I come back to purpose, right? Yeah. People are looking to put their money to good cause. And that might be philanthropic, it might be impact in their portfolio, it might be aligning with the values I have. It might also be sending my children to school or helping my elderly parents.
Right.
Or starting a new business, right? How about that for purpose?
Or shielding your money from taxes, right? I mean, I guess I'd be willing to take somewhat of a loss by putting my money into a philanthropic vehicle, especially if it's compared to a much bigger loss by giving it away to Uncle Sam and state and local and federal taxes.
Absolutely. And again, that's where
you don't look at things in a vacuum. You have to look at them overall.
Holistic wealth planning, and again, the role of a financial advisor is critical there.
Got to ask you, just in general, when you look at this environment, and we talk a lot about a bubble right now. I don't know, what is your take on it? What are the conversations you're having with clients about how they feel about it? Are they a little nervous about that trade?
Yeah, we talk to clients, advisors, end clients, institutions globally all the time. Look, the markets are the markets, and there are long-term investors that need to just keep staying with the markets. We talk about it's not time in the market or timing the markets, it's time in the markets. The other thing, though, is you just have to acknowledge that there's uncertainty out there. Right? There is volatility. There are things going on in the markets that, again, everyday people, let's take it to America and Americans, everyday people need professional advice. They need someone they can trust that will help them navigate that through professionally managed solutions or through advice. But there is uncertainty out there. But again, we come back to it's time in the market, not timing the market.
20 seconds, Jamie. I mean, are more people feeling comfortable putting money to work? Or are they, after kind of a nice bounce from the April lows, or they're like, I'm good, I'm done, I want to be a little bit more conservative? Just quickly.
No, we are seeing flows into portfolios in ways that are across.
As I said, BlackRock was up $1 trillion since the summer we talked.
We are having the best conversations we have ever been having with financial advisors, institutions, and wealth managers across the world.